Punita ji, you mentioned that the local companies, local demand, government in particular, and of course corporate India now needs to sort of pull up its socks to look at this negativity that is surrounding the export environment and make this work. To your understanding and against the backdrop of first quarter earnings, what do you think are the 3 or 4 sectors which now may be on a fast track or maybe sort of feeding their engines more fuel for stronger GDP?
So one is the growth and the second is the valuation. So let's put the valuation aside because some of this growth is probably already factored into valuations. So I think the engine that will grow the Indian economy has to be domestically led. It will not be export led in this environment, which is what I've been saying for a while. And we are fortunate to have, unlike some other countries, a very high domestic consumption base and foundation to build on. And we have a lot of young consumers in India, which are aspirational in nature and are going to be, continuously trending their spending upwards. And that makes India actually a very attractive consumer market, like the way US was several decades ago, where everyone wanted to export to the US. So we should not forget that fact that India is a market that a lot of countries would want to access our consumers. And so we need to really build upon that foundation. The domestic consumption story, I think, will be the engine of growth. Now, that could play out through many sectors. For instance, the easiest one is the healthcare sector, which includes hospitals, diagnostics, allied services, everything that goes along to support that sector. The other sectors obviously could be, financials, which are the backbone of any credit growth that is required to build upon this foundation. Fintechs are also seeing, strong transaction growth as well. And then I think government-led spending, infra, manufacturing, those are sectors that need to grow as well to keep up this foundation of growth. And of late, these sectors have demonstrated generally good earnings as well. And I think so these other sectors largely to focus on travel and tourism is another one. So there actually are a lot of different sectors. And I would say right now focusing back on valuations and where valuations are, it's the earnings have been mixed even within the same sector. Some companies have delivered and some companies have disappointed. So it's not a thematic market where, just some sectors will go up. I think it's going to be about stock picking the companies that are doing better than others. So there'll be winners and losers within the sectors as well. So it requires a lot more deep dive into those companies. And so I think that's the focus that we need to have, is to really be domestically focused and let the export-oriented companies figure this out. They'll come to an equilibrium at some point. As I said, they may not all be as impacted negatively, especially because of the peers, like say in textiles, in case of some companies, if Bangladesh is also being hit by tariffs, then the Indian companies may not lose as much as one had expected initially. Of course, they would all lose to some extent.
If you like the video, do like, comment, share and subscribe.